Welcome, everyone, and special thank you to Dennis and Laura from Sentinel Lease for featuring Madison Trust Company as your special guest this evening. We are a self-directed IRA custodian. My name is Nicole. I'm a part of our sponsors team. I am led by our investments manager, Donna, who's also on the call today. So say hey, Donna.
Hi, everyone.
We're going to have Dennis start off with talking a little bit more about Sentinel Net Lease, and then we'll get into what a self-directed IRA is.
Thanks, Nicole. Appreciate it. Well, everyone, thanks for joining us today. Really appreciate you taking time out of your day to learn a little bit more about Madison Trust as well as Sentinel Net Lease. Today, I'm going to spend the next 10 to 15 minutes talking about passive income strategies in commercial real estate and giving you a little bit more color what's happening in the commercial real estate market, as well as how you can capitalize on some of those changes with future investment opportunities. My name is Dennis Cisterna. I'm the Chief Investment Officer and co-founder of Sentinel Net Lease. Sentinel Net Lease is a privately held real estate investment firm. We started this company because we really wanted to bring Wall Street caliber investment opportunities to Main Street investors like you. We've been around for a little bit more than 5 years. Over that time, we've been very active in the marketplace, acquiring more than $330 million of assets, more than 2.2 million square feet across 23 properties in 13 states. Some of our most notable accomplishments include the fact that we've been able to produce an average annual cash-on-cash return net for our investors of 11.4%, and that's just from lease income. That doesn't include the profits generated from selling the property. You'll find that far exceeds the industry standards as well as what you're probably invested in yourself right now. On the deals that we have exited, we've generated a tremendous net IRR to our investors of 28%. Now, keep in mind, our firm does not take any development risk or construction risk. So to be able to provide this type of outsized return to our investors while minimizing the risk profile of our investments is really a substantial accomplishment. And I think the most notable thing, the calling card of Sentinel, if there was one, is that we do exactly what we say we're going to do. And that's proven in our actual performance. Over 20 plus deals in 5+ years, we've returned 99% of what we've projected to our investors. And I think that transparency, that amount of diligence is a welcome change in the investment community. And so because of that, we've been awarded a number of honors from various industry publications as a top investment firm, one of the best owners out there, and really it supports the goal we had all along, which was delivering a seamless and passive experience for our investors. And so for those of you that are considering alternative investments, including commercial real estate, that really is the goal here. There is no heavy lifting. You don't have to worry about a leaky faucet at 12:30 in the morning from a tenant. We handle everything from soup to nuts and do it in an institutional caliber fashion. I'd like to educate you a little bit about what's going on in the market right now. It's a really interesting time in commercial real estate. As you may know, the Federal Reserve started increasing interest rates about 2.5 years ago and didn't stop for quite some time, reaching levels that we have not seen in quite some time. As a result of that, the Treasury rates, which are the primary indices for commercial real estate borrowing, elevated as well. And with that came a whole lot of problems in the real estate sector. Number one was that now it cost more money to borrow. It was more expensive to borrow, right? Higher interest rates. And because of that, because it went up so quickly at such an alarming degree, it was problematic for a lot of investors out there. So you've seen investment volume decline 80% from the peak, which was in Q4 of 2021. So with those increased borrowing costs, that means you've now got to buy deals at higher cap rates so that the leverage is actually accretive to the deal. That means it's actually making sense. It's going to cost you less to borrow than it is to buy something. And as those borrowing costs have gone up, those cap rates have gone up too. but not really in line across the board. You'll see on the chart on the left, interest rates went from, anywhere from 2 to 3% for a lot of property types, up to 5, 6, 7% now. And so deals are still getting done, but with borrowing costs so high, it has really reduced that overall investment volume. And there's still a lot of problems in some particular sectors, including single family rentals, multifamily, and core industrial, where the deals that are getting done are actually less than the cost to borrow. And using negative leverage like that is a big no-no. That's in investing 101. The person that you're borrowing from shouldn't be earning a higher interest rate than you on your equity investment. There's also an issue with a lot of investors that are sidelined with legacy debt. So those investors that were able to borrow when it was very cheap, when valuations were higher, now have refinancing risk, and that's become problematic. So a lot of investors that historically were active in the market are dealing with these legacy issues, and so it's reducing the number of market participants that are in the market right now, and that really is providing an opportunity for well-capitalized groups. So now that we're in this new market, this elevated interest rate with lower investment volume, what's really going on is there's a bid-ask spread. And what does that mean? That means that I am willing to bid on something. I'm willing to buy something at a certain price. Let's call it an 8% cap rate, 9% cap rate. And the seller is only willing to sell it at a 7% cap rate. So he wants more money. Well, unfortunately for the sellers, when the buyers do not meet the market, that means that prices start to go down over time. And so that's provided a tremendous opportunity for us because cap rates have continued to escalate, which is essentially your return on capital, your net operating income divided by your purchase price. That means the price per square foot we're buying for these properties is lower than it has been. And we're able to buy properties with much more lease duration. Sentinel focuses on office, industrial, and retail properties. And so, whereas we used to buy properties with 5, 6, or 7 years of lease term remaining, now we're buying properties with 10 years, 15 years, even 20 years of lease term remaining on these properties. And so what that's done is we're buying at a higher cap rate with more lease duration at a lower price per square foot. And that ultimately lowers the risk profile and gives us a better risk-adjusted return overall. So we really like where we're positioned in the market right now to take advantage and capitalize on some of these changes. So much so that we created a fund around this thesis called Sentinel Opportunity Fund 1. So we're going to capitalize on those unique market conditions, focusing on really high quality, mission critical office, industrial, and retail in only suburban locations. You don't have to worry about the empty high rises in San Francisco or Manhattan. We're only focused on those high growth suburbs throughout the US, mainly in the Midwest and the Southeast states. What's also awesome about these properties that are in the fund is these are long-term stabilized assets that are cash flowing from day one. There's already a tenant in every building we acquire. So there's no lease up risk, there's no construction risk, and these are also net leases. And if you're not familiar with that term, net leases, especially triple net leases, means the vast majority of the operating responsibilities are the burden of the tenant, not of the landlord. So that means insurance costs, property taxes, maintenance costs are the responsibility of the tenant. And because of that, we're able to reasonably predict what the cash flow is going to look like over long periods of time. There's not that level of variance in our distributions to our investors because we already know what's going to happen with each property. We also created the fund to create a lot of diversity, not only by location, because we're in 13 states already, but also by asset type, different types of retail, corporate headquarters, lab space, data centers, distribution centers. Really a great way to take advantage of the disruption going on in the market and still intelligently diversify your portfolio. And the best part of the fund, in my opinion, is you're with an institutional caliber sponsor. We're all Wall Street trained and educated. We provide best-in-class reporting and asset management across the board. So you're really getting access to a management team and assets that you really wouldn't find otherwise. About the fund on a very high level, it's a $100 million fund. That means we're taking $100 million of equity investments. We'll end up buying somewhere between $225 to $275 million worth of assets using leverage. We're already about halfway committed, even though our first closing was just in June. And that's another nice element of this. We've already been buying assets, so you're coming into something that already has a track record. And we're raising capital for the next 12 months and change until the end of our fundraising cycle. The fund itself has a 7-year fund life, and we make quarterly distributions. So you're getting that cash back on a very regular basis. And so for those of you that are self-directed IRA investors and going to put your capital with Madison, what's nice about that is you have capital coming back into that custodian account that you can then go redeploy for other uses and really enhancing your cash on cash returns further. Speaking of returns, the fund's projected returns are 10 to 12% annual net cash on cash from the income alone, very consistent with what we've done historically. We project a net IRR to our investors of 18%. This is well above what you would see with a core strategy where you're not taking construction or lease up risk. And we also offer an annual preferred return to our investors that we pay current, meaning we pay on a very consistent basis from just the lease income of 8 to 8.5%, depending on the class of investor you are. We've got a great pipeline of deals. At the top are 3 properties we've already closed on. You'll see it very attractive cap rates with lots of term remaining. And we've got another $75 million of assets under contract that we're going to close in the next quarter. So really active buyers right now at really attractive prices. As you can see, the property type, the region, again, kind of supporting that theme of geographic as well as asset type diversity. Our operations team, our personnel, really second to none. Like I said, we are all classically institutionally trained real estate investment managers. We are at the cutting edge of technology when it comes to our investment platform. You can go onto your phone, you can go onto your tablet, you can go on your PC and access the property level reports, your tax filings, all at the click of a button. On top of that, we're using best-in-class technology as it relates to our own operations, asset management, accessing the debt markets, as well as building strong relationships with our tenants across the country to maintain high levels of occupancy. And we've got not only a great internal team, as you can see here on the right, but a phenomenal support team of third-party experts, including attorneys, tax, environmental consultants, our banks, insurance companies, brokerage company, property management. We have an army of experts that make sure that we are making the right decision every step of the process. So what is the next step if you like what I'm saying? Well, it's investing with Sentinel in Sentinel Opportunity Fund 1. And I'm pleased to announce that we've got a special offer for any potential investors that decide to invest through their self-directed IRA with Madison Trust. We're reducing the minimum investment to $75,000 in the fund. It's normally $100,000. We're reducing asset management fees by nearly 20%, and we're lowering the sidecar eligibility to $250,000. What that means is if you invest at least $250,000 in the fund, you can then selectively invest in individual deals within the fund as well. So if you see a deal that we're buying in the fund and you're like, I wish I had more in just that one deal, you can become overweight with your investment in just that one deal as long as you invest $250K in the fund. The steps to join us are pretty simple. You download the investment summary at sentinelopfund.com, sign the indication of interest forms, and then we're going to work with you and with Madison Trust on funding your account through your self-directed IRA with Madison. But a very straightforward process, something we're very excited about offering to the investment community and equally excited about doing with Madison Trust. With that, You can email Laura at sentinelnetlease or visit sentinelopfund.com, or obviously reach out to the folks at Madison Trust as well.
Alrighty. Dennis, thank you so much. That was wonderful. And thank you for just highlighting the step-by-step process for every investor to go through. It's super helpful for anybody who just wants to understand more. I'm going to have you make me the host so that I'm able to share my screen here.
I would be happy to.
Just let me know when you... Okay,
And you are now the host.
got it. Okay. Sorry, guys, 1 second. How do I get this to present?
Yep, you got it.
Okay. It's like, what's going on there? Alrighty. So let's get right into it. We're going to give you an introduction into the world of self-directed IRAs at Madison Trust Company, especially. So really, you may have heard about the self-directed IRA process before, which is probably what led you to this webinar tonight. But do you really understand how a self-directed IRA works? The answer is simple. A self-directed IRA is really about you as an investor. You are able to take control of where you want your retirement money to go, especially into things if you are passionate about them, whether that be real estate, private equity, private REITs, promissory notes, precious metals, and so many more things. Don and I definitely know how creative our clients can be. I mean, Arabian race horses, agave plant farms, people are very creative with where they want to put their retirement money. A self-directed IRA is a tax advantage or tax deferred retirement account. So we at Madison Trust are purely the vehicle that connects an investor's retirement funds over to alternative assets. So you might be wondering, how do you get started? This is the model that Madison Trust Company follows: open, fund, invest. Opening up your account is easy. You can complete our online account application, which will enroll you into our new client portal. You'll be able to speak to one of our account executives that will go through the setup process, whether it's choosing the type of IRA account you want to open, and just selecting your beneficiaries, how you plan on maintaining your fees, anything like that. That can be covered in 10 minutes when completing your account application process. The next step is we work with the investors to fund the IRA account. So there is a few ways clients can fund their IRA accounts, whether that be an initial contribution, an IRA to IRA transfer from a former custodian, or a direct rollover from a qualified plan. That would be a 401k, 403b, thrift savings plan. These are all types of qualified plans you can hold within a self-directed IRA. We do accept different types of retirement accounts here. So traditional, Roth, SEP, simple, and even inherited accounts are types of IRA accounts you can hold with us at Madison Trust. When it does come time to the fund process, we do have a dedicated transfers team. They're going to be able to assist you transfer the funds into your IRA account, or even work with your former qualified plan to direct the funds into Madison Trust Company. And from there, that's really when the fun begins. It's time to place your investment and watch your retirement grow. So the last step is investing. What we're going to ask you for is the investment documentation completed on behalf of your IRA account. And then you will instruct Madison Trust as to who we should be submitting the funds to. We will send them in the method of a check or a wire. It's whatever you elect on a simple investment authorization form. I am going to go into our disclaimer. Hopefully the lawyers are listening that Dennis mentioned before. We want to just reiterate here that we cannot offer any investment, tax, or legal advice. We can't recommend specific investments to any investor. It's always recommended that every investor perform their due diligence on any asset they choose to place within their IRA account at Madison Trust. Okay, that up there for a little bit. Okay. So now we're going to talk a little bit about the benefits of a self-directed IRA. Really, what is better than maximizing the earning potential of your retirement portfolio? Well, first, I can think of portfolio diversification. A self-directed IRA can invest into alternative assets that are completely off limits for regular IRAs. So an investor can diversify their retirement into numerous different ways. We want you to start thinking about your friend's startup company, or think about that fixer-upper you see down the street, real estate development property you're interested in. Next is hands-on investing. The account owner, not an investment broker, not a custodian, chooses the investments for the self-directed IRA plan. You may be able to direct your broker on when to buy and sell within a conventional IRA, but a regular IRA doesn't allow you to invest into alternative assets. So the options that you have within a regular IRA are really relatively small compared to what you can do with a self-directed IRA. And last is stability. So any investor can hedge against the volatility of the stock market and place investments that have a steadier and more reliable revenue stream. Our investors really don't have to rely on the rise and fall of the stock market, and they can buy or sell investments when they decide to.
Nicole, I'm going to jump in here a little bit and just also go a little bit deeper into the portfolio diversification. And a lot of investors, something they're really not aware of is the fact that, and hence why we are having this educational webinar with Sentinel Net Lease, is you're able to get into funds like Sentinel Net Lease through your self-directed IRA, through your retirement funds. And you know this from our travels, our conversations with investors, that's what they're unaware of. So what if you have the opportunity to get into a fund like this, utilizing a former 401k or a qualified retirement plan, or even an IRA you have, and depending on the strategy you use, whether it's a traditional IRA or a Roth IRA, can be completely tax deferred or tax free. And that is what we call, and we coin the term true diversification, that ability to really diversify your portfolio and get into funds such as this, just funds outside of the traditional Wall Street products, right? And hands-on investing, if you like the returns you see, you like the team you're working with, the investment sponsor, then what better way to grow your retirement portfolio than get into alternative investments such as this?
Exactly. And our next slide is the Madison Trust Company advantage. So really what sets us apart from the rest? We understand is many different self-directed IRA custodians out there, but we focus on a few core values here. The first being our incredible client support team. Our support team is extremely customer service oriented. I mean, just take a look at our Google reviews, just take a look at our 95% client retention rate. We want to really give investors an amazing financial experience. Our executive team really did start this company because they wanted a self-directed IRA for their own accounts that was reliable, picks up their phone, answers their emails, answers questions. They didn't want to hear a robot half the time. So that's really why we really value our incredible client support, as well as straightforward fees. Madison Trust, we focus on the affordability for every single investor. We offer a flat rate fee structure. We never charge investors an asset-based, percentage-based value fee. We don't want to charge our investors to be successful. Typically, our fee structure is $105 per quarter. That's $420 per year. And we do require a $500 minimum balance in the IRA account at all times. And last but not least is Madison Trust's industry knowledge. So we are consistently educating ourselves and improving our skills within this industry. Many of our team members are CISP certified and do have industry knowledge that will help answer any questions that investors have related to their self-directed IRA accounts, related to the types of investments they want to hold within their IRA. We are here and happy to help them, especially when it comes to the unknown world of self-directed IRAs. Anything else, Donna, that I missed during that Madison Advantage?
I think you hit it perfectly, Nicole. And one of the things that we are more than happy to educate is any investors today attending here who would like to take advantage of their IRA portfolio, their IRA funds to get into this opportunity. Give us a call to understand what you're able to do and what you're not able to do, especially when it comes to your retirement funds. Because sometimes I always tell all investors and clients, right? Sometimes if you don't know the answer, give us a call. We might be able to walk you through the process. And then once you have more clarity, you're able to make a better decision. And of course, for anyone signing up with Madison Trust to invest with Sentinel Net Lease, we do have a promotion going as well. So Nicole, if you want to just put that out there as well.
Mm-hmm. Yeah, so anybody that signs up with Sentinel Net Lease to invest through Madison Trust into the fund, we're offering them $100 off. So that would waive their account application fee. That would waive their first investment fee. If you do sign up after this webinar, you will not be charged fees for the remainder of the year. I mean, we're still in 2024 right now, so hopefully you see this between now and January 1 of 2025. But I mean, gotta just
I'll tell you what, if they see it in 2025, I'll cover their fee of
Woo!
$100. There you go.
All right.
You know what? I will do you guys one better. If they see this in 2025, you're going to give a $250 credit for any IRA investor coming through Sentinel Net Lease. How about that, Dennis?
You know what? This is the teamwork I've been looking for. I appreciate that.
And the Corvette. Are we going to throw the Corvette in there?
One step at a time.
I just want to, put our headshots up there. That's who we are. And also our emails, our phone numbers. If you guys have any questions after this call and you want to just learn more about who we are, what we do, and how we can help you, there we are.